Good afternoon, good morning for those of you guys in a different time zone. My name is Michael Vigil, agency owner here with Symmetry Financial Group, and welcome to our weekly team Zoom for today. So today's presentation is going to be pretty straightforward. If you guys saw on the text message, right, it says, I have insurance through work. Why do I need you, or why do I need yours, right? So let me go ahead and share my screen and we'll go ahead and hop right into this. So here we go. So I like to call this the good, the bad, and the ugly, right? When it comes to objections that we receive, and this is a pretty regular one as well. Well, what do I need that for? I already have life insurance through work, right? So a couple of the things about employer coverage or life insurance through work is understanding what the limitations are, right? So employer provided life insurance is definitely a good start, and I always congratulate people when they have it. It often lacks the comprehensive coverage though for true financial security. And we'll cover some of those things as we go through this. But it really leaves families in a really uh, vulnerable state, right? Especially if something happens if someone passes away off the job. So the coverage is usually tied to employment. So if you change jobs, you risk losing those benefits, right? If you become injured and then you can't return to work, you lose your coverage. So relying solely on employer insurance can lead to unexpected gaps in protection. And especially as you get closer to retirement age or anything like that, it's one of those things that if you don't own something already, it's you're going to see the gaps that you have in your financial plan. And then insufficient amounts. So typically they'll give you 1 to 3 times your salary. And the nice part about it, right, is that it's affordable. So we'll talk about that here in a second, though. This here for average numbers, most financial experts will recommend between 10 to 15 times your salary. I personally like to recommend about 20 times your salary, especially if you have kids in the household or you have dependents that are counting on you. The good. So it's low cost, right? Usually you're part of a risk pool, so you get it at a reduced cost. It's one of those things that you get to have it automatically deducted from your payroll. It's every week or every 2 weeks or every month, depending on how your payments come out and not you, the agents, obviously, but your clients that you're talking to, it's an easy deduction for them. So it's one of those things that they don't have to really think about, right? The other thing is guaranteed issue with employer provided plans, everyone's approved. So if you have pre-existing health conditions, it might be a good option for you. But if you're young and healthy, or even average and so somewhat healthy, right? I would still recommend to your clients for them to get their own policy. So with the guaranteed issue, though, you don't have to do medical exams. We don't, most of our policies that we offer, you don't have to do a medical exam either. And you don't usually have to worry about any other eligibility issues when it comes to that. And then, like I mentioned earlier, right, you got the simplicity of payroll deductions. Automatic enrollment means employees can get life insurance without hassle of billing, which enhances participation rates significantly. But that usually comes at a cost, right? So the lower no cost is you got free coverage. And that's usually just 1 times your salary. So if you make $60,000 a year, that's all the coverage they have. And we all know how far $60,000 will go, especially after covering the cost of a funeral. Average funeral is about $13,500. So we'll just say you got about 40, what is that, $46,000 left over with a $400,000 average mortgage in the United States right now. That's not a whole lot of money left over for your family to be able to make the decisions that they have to make. So, um, the guaranteed issue, we talked about that. It's one of those things that everyone's approved for as long as they're working through a group plan, right? Here's the bad, right? It's not portable. So that means when you leave your job, you can't take it with you. And if it is something that they allow you to take with you, it's pretty expensive because then now you're moving into a standalone policy. Um, and then the amount, right? So let's say that you were at a job that paid you $60,000 a year and they gave you 3 times that. So you have $180,000 in coverage with the $400,000 mortgage. Again, that's not quite enough. If you have a mortgage and, we'll say the average mortgage right now is about $2,000 a month, they've got $24,000 a year. If you pass away after, 20 years, that's $480,000 in mortgage payments that aren't coming in anymore. So, is 3 times your salary really something that's going to make a difference for your family? And then age-related pricing, right? So if you started when you were 22 years old and you retire from that company when you are, we'll just say 50 years old, well, the cost of insurance at 19, 20, 21, 22 years old is a lot cheaper than it is at 50 years old. Usually your health is different as well. There's a lot of different things that could lead to higher premiums, and then your insurability is not available, right? So, and then like I said, it's not portable. So, employer provided life insurance often ends when you leave your job, and then you don't have this whole lot of other options when it comes to trying to pick up your own policy at that point. Insufficient coverage, we just talked about this, right? About, you need at least 20 years really of coverage, or 20 years worth of your salary, and then age banded pricing. So coverage costs rise at milestones. So 40, 45, 50, 60, 65, and then even after that, you may not qualify for different term products, so you'll have to go to a permanent product. And it just really limits what you can get. So, the ugly part of this, here are the hidden risks of employer life insurance. And this is the stuff people don't like to say. And that's okay. I'll go ahead and say it for you, right? So you got false security on there, you got coverage reductions, and then you've got no living benefits. Something that we offer here with Cemetery Financial Group is we have a lot of living benefits with the different carriers that we have, right? So the misconception is that many employees believe employer provided life insurance is sufficient, unaware that the coverage often ends when employment does, leaving families vulnerable during crucial times. Part of this vulnerability is also, if you don't read the fine print, some of those employer offered life insurance policies only cover for on the job deaths or things or normal type of deaths, right? If you're hunting or if you're, driving a side by side, your employer coverage may not actually cover your death, and give your family a benefit at that point. So that's a lot of lost premiums, a lot of lost time, right? And then understanding age-related insurance changes. So many employers provide life insurance plans. They'll be cut by 50% once you reach the age of 65. And that's not because the employer wants to do that. It's just because that's how the life insurance industry works. There's no more term options available. So group policies will go away at that age, and then you have to get moved into a different type of policy. And again, if you don't have something that you started with that you own uh, on your own, right, that you pay for after tax dollars, you're also limiting yourself on what, different benefits that may be available to you. So employer provided life insurance often lacks key features like chronic and critical illness riders, making it less flexible and unattractive for those seeking comprehensive financial protection. That's why working with us, working with professionals that really understand how life insurance works and the different products that are available for them, how to stack different types of policies, or how to get them, multiple policies with different types of coverage in order to cover all assets of their financial well-being. So, I want you guys to just really take this lesson from today and understanding the value of having your own coverage that you pay for, or for your clients rather. So employer insurance limitations, right? Well, employer life insurance offers essential benefits. It should be viewed as a temporary supplement and rather than a comprehensive solution. Personal coverage is crucial for long-term family protection. So with that, I'll turn it over for questions and we'll go from there. Anyone have any questions on any of that? And I mean, Ale, you know this better than anyone else, right? Like honestly, when it comes to employer provided coverage, did I misrepresent anything there?
No, I think it's great. I think a lot of people don't know that when they do look at their benefit package for that whole year. Um, and then a lot of life changes can happen during that time where the work actually cuts it or just doesn't care. So, yeah.
Yeah, I mean, how many times when you were working with Aflac or stories did you hear, right, of
Mhm.
employers just cutting benefits in general?
Yeah, they do that.
Yeah.
And then they can't apply because they're old, they have health issues. Sometimes they think it's guaranteed, but it's actually just accidental and it only covers accident death and it's a whole mess.
Oh yeah, and the accidental one is a big one. I mean, I've seen that happen a lot. Oh yeah, I've got $500,000 in coverage. I only pay 20 bucks a month. And in our mind, we're like, we're okay, you're paying 20 bucks a month for $500,000 in coverage. Usually that means that it's an accidental policy.
Yeah.
Um, and when you own a standalone accidental policy, a lot of people don't realize that you have double indemnity or you get the common carrier clause as well.
Yeah.
So Marvin, you probably don't know what that means, right? But what that means is if you are a fare paying passenger, so if you're in an Uber, in a cab, in a boat, on a ferry, in an airplane,
Airplane.
train,
Hmm.
right?
Train.
You or even like Amtrak or not Amtrak, Greyhound, right? Like a bus or anything like that, your
Hmm.
policy will double in coverage. So there's a lot of benefits to having your own policies, Marvin.
And
Uh
then there's agents too that were new like me that didn't add that rider and now they don't qualify for that. So there's a lack of knowledge for the client and the agents as well.
yeah, absolutely. So and Marvin, one of the things that you'll understand that we like to do in this agency and in the Kimbrell Master Agency in general is we actually like to write two policies on the families per person. So like if I was visiting with you, Marvin, I would write a health, or life insurance policy, and I would write a standalone accidental death policy. And the reason for that is if you come into a financial crunch or something like that and you have to let one go, you can keep the more affordable option, right? Or keep something, at least have something in place. So I like to write two. So when we first started, we would always write Mutual of Omaha Term Life Express and then a Mutual of Omaha Accidental Death, the guaranteed advantage. So, um, and then, so I'll give you guys a real world example. My men's mentor from our men's ministry, in August, yeah, it was in August of 2023, he had a stroke while in service at church. This guy is a beast, right? Like you heard Darren talking on the call today. Like he's like a physical specimen of health. Like he looks like like he's well taken care of. Had a stroke at church, 59 years old, and he went to go explore his options at work on how much life insurance he could get. Well, as a stroke victim, you're not allowed to get any more term insurance. Two, just last month, he had some issues with more blood clots forming. And I told him, I said, look, why don't we at least get you $500,000 in accidental coverage on top of what you have? And he was like, oh, let me go ahead and explore what we have through work. Well, we just found out that work is no longer allowing them to add coverage. That's it. He's capped out. And he never increased it based off his salary as he advanced. So like now he makes $240,000 a year, but he's only at $180,000 in total coverage. Their mortgage and their monthly expenses are like 6 grand. His wife's getting ready to retire. So I mean, there's a lot of these things now that he didn't take into consideration. And we as insurance agents run into this particular objection all the time. Oh, I have coverage through work. I don't need it because they see what we're presenting and it may be $90, it might be $180, right? A month. And when they're thinking about it, they're like, oh, I pay $25 a month through work. So that's why I wanted to make a presentation like this. And I'll make it available to you guys as well. So you guys can use this presentation. You can modify it for yourself and just really, hone in those ideas and internalize them. So when you are sitting with your people, you have the information you need to arm yourself properly with it. So, any other questions?
I have one question, but it's outside of this.
That's okay. Let me go ahead
Um,
and press the
okay, so I ordered leads, MIB leads, last week, but they're really slow on or the lead orders. Like the lead orders aren't coming in. So how can I cancel that order and order new leads?
So you literally just go to lead stream, and then you can literally just cancel the order. There should be a red X. And if when we're done with this meeting, Ala, we can just stay on here and you can share your screen and we can go
Oh,
through the lead stream and take a look at that.
okay, perfect. Do
Marvin,
you know? Sorry.
your license gets issued today or tomorrow. I know you're chomping at the bit for that. So was did you have your infusion today or your dialysis? You're muted. I can't hear you. Marvin, I can't hear you.
Oh, sorry.
Oh, you're
There. So, yeah, I went yesterday morning. I go again tomorrow morning.
Oh, okay, I got you.
Monday, Wednesday, Friday mornings. Yeah.
Monday, Wednesday, Friday. I got you. Well, and
Yeah.
that way, just I have it in my head because you do
Sure.
that at 10 o'clock, you said, right?
Well, I'm usually out of there by 10 or 10:30, and then it's a half-hour drive home. So I'm home by 11. Yeah.
Okay, so 1 o'clock my time. That way, I
Yeah.
just have a good understanding on that. Nope.
Okay. Yeah.
Let me go ahead and press stop recording on this.